I'm not going to say what it is. It's just horrific, terrifying to think that any public servant would do that.
Hey guys, welcome back to Library of Wealth. In a recent interview, Michael Saylor discusses his thoughts on the ongoing U.S. banking crisis and the impact of Bitcoin on the wider crypto ecosystem. According to Saylor, while strong nation-states may still have fiat currencies, the currencies of most countries will eventually fail. He advises against holding cash that rapidly loses 20% of its value per year. He also believes the recent Bitcoin rally is not merely a reflection of mainstream adoption. Despite recent price gains, Saylor believes that a bigger rally from investors is yet to come. He is confident that when it happens, the leading crypto asset will easily surpass 10 times its current value. Saylor also stresses the importance of properly capturing and cleaning out the crypto and digital assets ecosystem before attempting to revolutionize the entire banking industry. Let's get right into the latest interview with Michael Saylor. Don't forget to hit the like button and subscribe if you enjoy the content we do here on this channel. Let's get right into the video.
If you are incompetent, then you're going to suffer the consequences. But let's think about what banking executives in the U.S. do. The U.S. banking system is the best in the world. Here's what they do. You put $100 billion into the bank. They have the deposits. They turn around. The Federal Reserve interest rate, short-term rate, was 0. And these guys went and invested $100 billion of those deposits in mid-dated, long-dated sovereign debt that was yielding 1.8% interest. The Federal Reserve took the interest. By the way, would you loan me money for 30 years at 3% interest rate? Like, can you imagine that? If the inflation rate was 8 or 10%, would you loan money out at 3% interest rate for the rest of your life? That's what the banking executives in the U.S. did. At the point when the
You're talking about Silicon Valley Bank.
All of them, right? Pretty much.
All these guys.
Not just the ones that went bankrupt, right? There's a host of banks. I think they had, what was it, like $800 billion of unrealized losses or something. A host of banks went, and anybody that bought mid-dated or long-dated bonds at the bottom of the market when interest rates were 0, they were loaning out money forever at 2% interest or 3% interest or 1.5% interest. And as soon as you redeem, what happened, of course, is the Fed raised interest rates from 25 basis points. Actually, the rates went from 0 to 500 basis points in 12 months. That's the sharpest increase in interest rates in memory. That in itself is, I'm not going to say what it is. It's just horrific, terrifying to think that any public servant would do that. But it's equally terrifying to think that if I was your money manager and if you had given me all your money when interest rates were 0, and I said, well, I guess interest rates will stay 0 for the next 30 years, and so I'm going to loan it out as a bond and lock in a price of 2%, you would have thought I was crazy. No, there is no individual, no corporation, no rational corporation, no economic actor that would loan money forever for 3% interest when inflation is running double or triple that. So the question is, who would? And the answer is a bureaucrat, either a governmental bureaucrat, someone that is coerced by regulatory policy where they're forced to. For example, a bank can't buy Bitcoin, but a bank is almost obligated to buy treasuries. Right? So the politicians create a set of rules that strongly encourage you to do certain things and strongly discourage you to do other things. And generally, they encourage you to do the thing which is probably least economically viable. But there are probably local organizations and banks in foreign countries that own their own local currency, right? Like, would you buy, an African currency with an inflation rate of 200% a year? No, but people do. Why? Because the government controls or owns the entity, and so they force that.
Saylor states that the current economic landscape is not a global financial crisis yet, but rather a localized panic intentionally created by larger banks. He also argues that these banks are consolidating power and wealth at the top, leading to significant income and wealth inequality, and this concentration of power is a hallmark of corrupt societies.
When you said all these guys that are given, their money for 3% over 30 years or whatever, there's a lot of them. Silicon Valley Bank's not the only one. Signature's not the only one. There's a lot of these guys that are doing it.
Most of the banks.
Most of the banks are doing it.
We looked at the chart. Remember that chart?
Exactly. 64% who was above it.
And then JP Morgan was the little guy
14% at the
Yep.
just,
So the point is, don't trust your money in any bank that's basically betting it on irrational investments.
You say something like that as a guy that's a billionaire. The average guy's not a billionaire. The only thing they know what to do is walk up to the bank. So it's a different scenario you're in. But the question I want to ask you is the following. Are you saying there's going to be bigger banks that are on the line right now that we could see popping up, that they're in the same situation? Because if most of them are doing it, Powell's not lowering rates, and they're saying he's not going to do it till December. So how much longer can these guys handle these types of conditions?
What I think happens to the banking system is all of the regional banks, the small, mid-sized banks are at a massive disadvantage right now because the government is showing that they're not going to bail out those equity holders. So there's a migration of deposits from the small banks to the big banks. The JP Morgans, the Bank of Americas, the mega banks will continue. They'll be just fine. They'll be supported by the government. The small banks are going to struggle, and that's what you see going on right now. If you're a depositor, you'll probably get bailed out by the government. If you're a bondholder in the bank or an equity holder of the bank, you won't get bailed out, right? And so there's a crisis for investors, whereas everybody that's a depositor doesn't want to sit around and take the risk, right? Who wants any anxiety? So I think that to the extent that you rely on banks, clearly the world is waking up, and the U.S. is waking up, and they're thinking, I want to be with big banks. I wouldn't have my money in a bank anywhere outside the U.S. in a weak country, right? You need to be in a rich, strong country with a rich, strong bank. With regard to what individuals should do, I think the logical answer is for expenses. If you have expenses in the next 3 months, you have your expenses in the local currency, which is the peso, the naira, the whatever, because it's legally obligated for you to pay in the local currency. For the next 3 years of expenses, or 1 to 3 years of expenses, you put your wealth in the strongest world currency in the world. That's the dollar right now, but you make sure that you have that currency either self-custodied or you have it in a bank that you trust. That's hard. If you can't find a bank, if you were in Lebanon right now...
Can we trust you, bank?
If you were in Lebanon right now, you wouldn't put your money in any bank. You would actually put it on the Bitcoin blockchain. For any amount of money you want to keep the rest of your life, if you want to give it to your kids, if you want to actually retire on it, anything that's investable asset, you would put it in Bitcoin.
Saylor believes in the long-term potential of Bitcoin as an investment, despite the current scrutiny of crypto by the SEC. He says those with crypto assets are likely to trade them for Bitcoin anyways, which is seen as the most trustworthy crypto asset and network. Saylor notes that Bitcoin has been moving up about 50% a year on average over the last 3 years, and the key to investing in Bitcoin is to be able to hold on to it and stomach the volatility. Despite some short-term losses, MicroStrategy continues to remain the largest holding of Bitcoin in the world. Saylor remains bullish on Bitcoin and echoes the sentiment of many high-profile investors, saying that the crash of the US dollar will lead to a rally in Bitcoin, the likes of which the world has never seen. What do you think about the latest interview with Michael Saylor? And how will the banking collapse we're seeing impact Bitcoin? Comment down below. Thanks so much for watching. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.